couple weeks ago, we noted a sideways consolidation pattern that Bitcoin had been trading in since the beginning of the year. It was 45,000 on the upside and 35,000 on the downside. Yes, I'm aware that that's a pretty wide band, but it's Bitcoin, and it seemed like relative calm compared to its volatile history. That has now changed, and Bitcoin has moved above the upper band and appears content to consolidate at higher levels. Now, some traders cite the pivot of the Russian government from threatening to regulate Bitcoin in January to floating the idea of accepting Bitcoin for oil in March. These are the types of headlines that seem to validate the Bitcoin enthusiasts in that it affirms that in moments of global stress, it may increase the demand for Bitcoin. Secondarily, the announcement from the Bank of Japan that it would cap 10-year yields at 0.25% also seemed to add to the Bitcoin rally as the yen was punished on that news. Now, if Bitcoin is genuinely going to compete with fiat currencies, it would stand to reason that behaviors that could soften a major global currency should support Bitcoin, and it did. Now, if a trader believes that the combination of technical strength and the changing fundamental picture could push Bitcoin higher, they could express that thesis by buying the CME April micro Bitcoin futures contract at 47,250 and target the December highs of 59,000. A stop for this trade could be placed at 43,000 below recent support levels. Now, this trade could make $1,175 if your target is reached and risks $425 if you're stopped out at your level. Now, conversely, if a trader believes this is a false breakout and domestic government regulations could drive Bitcoin lower, they could express that opinion by selling the CME April micro Bitcoin futures contract at 47,250 and target the February lows of 35,000 with a stop placed above at 51,000. This trade could make $1,225 if your target is reached and risks $375 if you're stopped out at your level.